Good morning, or good morning, good evening, everybody. Good evening. Welcome out. We're going to give it just a minute or two to let audio connections initiate. Make sure anyone in the trying to get in gets in. Bear with me just a moment. It's good to see everybody tonight. Got a good attendance already. Love it. Got the good market today. Got some good momentum after hours from some earnings reports. It seems that our posture on the market is holding up. Our stance, what we're looking for, is holding up. So I'm looking for some information to come that generates alerts. Be ready for that to come. That will be on Discord, remember. If anybody is new. Oh, I'm being told no sound. Are you guys hearing me? I was told no sound. Let me know if you're hearing me or not. There should be sound. My microphone icon is moving. That tells me it's. Fred says yes. Okay. Sandy says I have sound. I thank you, Paul. Thank you, Sandy. Okay, fantastic. Well, we've got everybody in. One person. The only problem when someone says they have no sound is they can't hear me tell them it's on their end. That's the dilemma. My assumption is they'll log out, log in. That's always the best thing to do if you ever find yourself on that end of things. Welcome, everybody, to the Market Watch Group Trading Foundations. We are in part 2 of trading systems, strategies, and rules. We did part 1 on Tuesday. There we were really breaking down the hierarchy and the structure. What do we mean when we say a trading system? What are we trying to develop? What structure do we have for that? What do we mean when we say a strategy? What's the difference? What am I thinking about? What am I doing when I build strategy? And what are my rules and how the rules help in defining systems and defining strategies? They play a part in both. So if you want some clarity in what we mean when we talk about those and how we look at it from a organizational structure in a hierarchy type standpoint of what leads, what has dependencies in the trading system in order for the strategies to work, etc. Today's a little bit different. So we're gonna dive in a little bit more into philosophy behind our systems, our strategies, and our rules, and our mechanisms for evaluating and quantifying those systems, strategies, and rules. Look, here's the deal. I tell people, I've said it here very often. If you treat it like a hobby, it pays you like a hobby. If you want your trading to pay you, treat it like a business. And so this is the business class. And is it always exciting looking at charts? And no, sometimes we've got to really just make sure, and that's why we call this the foundations class. Are you building your trading on something solid psychology mindset, solid risk management, solid organizational structure, record keeping, analytics? Is everything defined? Is it black and white? When you've done that, you have a much higher expectation of success. That's what we're talking about today. Let's get into it. My name is Scott. I will be your host. As always, here's our disclaimers. We want to make sure you understand, especially as alerts are becoming more in our purview. Educational and illustrative only. We are not brokers. We are not advisors. And as you take information and trade it, that is your information and your trading. That's accountability is a big part of us developing the right mindset in order to really adopt a growth mindset. Agenda today, a recap as we dive into trading systems, strategies, and rules. We'll talk a little bit about what we covered last session on Tuesday. Be water, my friends, another core philosophy of ours in trading, a core philosophy of mine in life, stolen from the late, great Bruce Lee. Originally, it goes back to Sun Tzu, the general who wrote the book, The Art of War. Very interesting. I've had a couple of discussions of that book. My son, who's 21, is reading it for the first time. That was the age I was when I read it. Very interesting discussions. Good evening, Bob. Good to see you. Glad you could make it. So, Be Water, adaptability, right? Adapt or die. That's what we're saying. We're going to talk about quantifying your results and understanding performance metrics. Obviously, we have a record-keeping methodology that we use, very specific in how we look at metrics, in what information we're trying to use to evaluate the process, really more than the results. Obviously, the results are important, but the process, if we can't evaluate and discern from the process standpoint what needs to be fixed, then we're just constantly throwing spaghetti at the wall and hoping something sticks. Our objective is to be very deliberate, very focused in what improvements we make in our systems and our strategies and our rules. And in order for us to do that, we have to clearly understand each component, what they're made of, how we should be processing and thinking about it as we develop and put to paper what it is. Okay, that's what we're here for. We'll talk about developing our trading plan with adaptability as a core characteristic. We'll talk about common mistakes made in pursuing adaptability and your trading metrics. We'll talk about best practices for how to adapt and measure performance. And we'll get into the synergy of systems, strategies, rules, and adaptability. How does it all come together? You're trying to build this trading plan with 8 sections, and each section needs to somehow be working in conjunction with the other sections. There needs to be alignment. The reason we take the time to define philosophy and mindset is because we need those things to be in alignment when we're going through market posture, when we're going through our strategies and the rules involved, when we look at defining our risk and how risk will be applied during different markets to different systems. All of that, it's a lot of moving parts. People take that for granted. There's a reason why a bank will not lend you money for a business if they don't see a really well-structured business plan. Thought out, you've played devil's advocate to yourself already. You're not just like, oh, I've got a great idea. You're tapping the side of your head. It's magical. Give me some money and I'll go make us all rich. That's the trader in us. Sometimes we have those tendencies. Yeah, let's giddy up and go. Shooting from the hip, gunslinger in the market. The banker in you needs to be like, whoa, 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 my friend. Relax. You've got some due diligence here. You've got some work to prove to me that, yes, there is an expectation that we will be profitable with what we're doing. The banker is a lot more conservative. The banker is a lot more focused on the details. So the banker needs to make sure that she's controlling the trader, who's a little bit more impulsive, a little bit more of a gunslinger. That's the dichotomy that we're working with. So how do we achieve that? The trading plan achieves that. We're not expecting to do all that in our head. It's too much going on, right? Put it to paper. That's the agenda. That's what we're talking about. So quick recap. Systems, strategies, rules. What is the trading system? That's the overall structured framework we use, making systematic decisions. Right? You're like, what you might mean, what do you mean systematic? Are you anticipating or not anticipating? Or sometimes anticipating? When you're taking profits, are you selling half? Are you selling a third or a quarter? Are you selling 2/3 or 3/4 quickly? There's definitely markets where I'm like, if I get a 2-day move in my favor, I'm taking 2/3 of the trade off. I'll leave one little piece and see if I can catch a little, but there are definitely markets where that's all you're going to get. So you better take it when you have it. And there's other markets where we're going to let it go for 7 to 9 days. I don't want to make those types of decisions on a trade by trade basis. I want the system to help me with that. That's why we spend the time we spend posturing the market in order to have that. So this is the framework that helps let the information we gain from market posture trickle down into the rest of our decisions, right? It helps us with risk management. It helps us with how we incorporate entry and exit rules. It provides an analytical basis for us to implement those things. That's the system. That's what you're working on when you're working on your overall trading plan. Yourself, the market posture, the risk, the routines, the analytics, that's the systematic framework. A strategy is your specific plan outlining when and how. Rules of execution. When will you enter? What trades will you, what potential stocks? My rule is to take trades from my watch list. That's my methodology. That's where my trades will come from. So then I need to have a rule that says, well, what criteria does a stock need to make in order to be put onto the watch list? That's a rule. That's a system rule, right? That feeds the talent pool for your strategy to work off of. Your strategy needs a talent pool. It needs a list of stocks that it can trade or opportunities that can trade. So the strategy is what's the pool? What analysis methods will you use? What chart timeframes, what indicators will be used to make the decisions? If you use different timeframes, make sure that you define specifically what the role of each time frame is. We can't have ambiguity jumping from chart to chart. This one says up, this one says down, right? These are the things that we are fleshing out now in the form of our trading plan, systems, strategies, and rules. What is the setup? What is a trigger? Where's my stop? Where's my target? Where's my first take profit point? All of that is a strategy-based rule. So whether you're doing a breakout or a bounce or a continuation trade, whatever it is that leads you to that, each strategy is like a product in our business, and they need their own sets of rules. That's what we're doing with the strategy. Now, your trading rules are the specific directives, clear. We can't be like, I kind of do this. It's got to be specific and concrete within the trading system or strategy. So there can be system rules, there can be strategy rules that guide our actions. They cover things like what position sizing, risk management, the criteria for entries and exits. When do I determine that the stock is in momentum mode? If I raise my stop, raise it to where? Am I raising it on a daily or a 4-hour? Those questions should be answered by rules. So that's what you're looking at, is defining those specific rules, system, strategy, rules. Now, with that in place, and if any of that needs a little bit more clarity, I tell you to go back to your Tuesday email, go to the content library, access the System Strategies Rules Part 1, and you'll see we go into more detail about each of these components. Okay. What are the characteristics of my system and my strategies? First and foremost for me, these are words to live by. Be water, my friends. You pour water into a cup, it becomes the cup. You pour it into a teapot, it becomes the teapot. It can flow, it can crash, right? It's flexible, it's dynamic. It responds to its environment. Water finds a way. That is what we mean when we say be water. So how do we adapt to changing markets? Well, then the first priority must be that I have a constant understanding of the current market in order to then recognize if there's change. Market watch group. That's the crux. That's the cornerstone of what we do. We base every week on our Sunday preparation session that tells us what are we concerned about? Are there concerns? Where are they coming from? At this point within the group history, you can go back and trace. Was there a difficult market in September, October? Yeah. We saw it coming. It's not a crystal ball, right? It's not a crystal ball, but it gets you thinking the right way, the right times for the right market. When things started getting better, late October, early November, we saw it quickly and it could respond. could hit it pretty hard for late November, all of December, and even moving now into January. We've been bullish. It's not an accident. We're not trying to pick other trades. But what do I say every time? Every time I say I'm bullish, I'm telling you what else am I looking for that might give me an indication that it's changing. Be water. In order to be water, we have to make sure that we have mechanisms in place that help us to adapt to changing conditions. Strategies that worked yesterday may not work today. We have to adjust. So prioritizing flexibility. Whatever it is that you're doing, you have to have, when are you going to change your stop loss from a little looser to a little tighter? When are you going to change your trailing stop? When are you going to change the amount that you sell from a quarter to a half to a third, right? But this is the flexibility. You're saying, I've got all these mechanisms that can be a little bit more aggressive, a little bit more balanced, a little bit more conservative. But my plan, which, right, my system that I'm defining, that is what needs to orchestrate. So we're trying to prioritize that flexibility and have the rules within a system context orchestrating that flexibility. Anticipating and responding. Anticipate market shifts. I've said this many times, and I'd like to point it out in our group where I say, oh, look what they're talking about in Yahoo. They're talking about XYZ. We talked about that 3 weeks ago. If Yahoo is the first thing to tell us about something to talk about it, number one, you're already too late. That information's bad information. Everybody has that information. If we're relying on Yahoo to produce, right? If we're relying on that to say, oh, this is what the Fed is thinking, we're too late. We are really working hard to be in a position to anticipate. Look at the way we look at VIX hedges. It is up, dialed in, the powders, the bullets in the chamber. We're ready to fire. Sometimes we do, sometimes we don't. Sometimes we say, this is a judgment call. If you have bullish trades, you should probably think about this. If you're already done taking profits, you're not hedging. There's nothing to hedge. Now it would be speculative. So now you have to ask yourself a different question. Are you bearish enough that you're speculating, or are you just saying, hey, you know what? I'm actually quite bullish. I don't want to speculate to the downside. That's going to distract me from my bigger purpose, which is bullish trading, right? So we need to make sure that we have our system helping us to anticipate markets and act quickly. It's now or not at all. That's what I say all the time in our group. Now or not at all. And if it's not at all, that's fine, right? We're not going to be regretful. We're just going to say, okay, look, I missed that. Let's evaluate why we missed it. Did I hesitate? Did I allow emotion to cause me to hesitate? Did I have a signal but not follow it? Well, that's a mistake. That's us identifying we made a trading mistake, and then we can go forward and not do that again. Avoid rigidity. Be water is fluid. Rigidity is to break, right? So we don't want to rigidly adhere to a single strategy. We don't want to be rigid in our reluctance to acknowledge when conditions are changing. Oh, I can't tell you how often it happens. So many different versions of stories I could tell about that lack of ability to adapt. The frog in the pot of water. Embrace flexibility to stay relevant, stay profitable in dynamic markets, because that's one thing we expect. Expect it to change. Expect it to change quickly. Okay. Quantifying results and performance metrics. So like any good business, we have to have our metrics, our key performance metrics, right? What are the measurements that we use? Remember that trading is a numbers game. So we need to know our numbers. What numbers? Well, right? So there's a significance of measuring performance because that is what informs our adjustments and improvements. If we don't have a measure, if we don't have a standard, we have nothing to try to improve. So the first thing we're doing is standardizing the process in order to then have standardized results. And it's the standardized results that we look at from a numerical analysis to say what needs to be better here. So let's talk about our core metrics, our key metrics, and then how we look to improve them. The key metrics that we're working on are, number one, expectancy ratio. An expectancy ratio is going to be a combination of your win-loss rate. So what's your winning percentage, what's your losing percentage, and your reward to risk ratio. So when you're right on average, how much do you make? When you're wrong on average, how much do you lose? That's those components. Those components also go into the Kelly criterion. That's important, but not as important. In the beginning, expectancy, which is comprised of those core variables in the middle. When expectancy is positive and we have established a statistically relevant sample size, i.e. 50 trades or more with our expectancy ratio, now we can move on to risk optimization. So expectancy ratio expresses how much you expect to make for every dollar you put at risk. Are you profitable? That's that simple. If your expectancy is negative, you're in Las Vegas. Expect over time that the longer you play, the more you lose. That's where you have a negative expectancy, is in Las Vegas. That's the first thing we're trying to improve. Now, expectancy is made up of your win-loss rate, which is measuring your trading success, and the R to R ratio, reward to risk ratio, which shows your profitability factor. So your expectancy is a combination of your trading success and your profitability factor. You can be very successful, 80% right, but if your reward is 1 and your risk is 5, you're losing money. So it's not about success in how many trades are successful. It's the fact that your profitability factor is untenable. We need it to be a combination of both. It's important that we measure both and look at both independently. Kelly criterion, once we have the right mix of success and profitability, that gives us a positive expectancy. Once we have a positive expectancy with enough data to assume it's stable, we then move on to help optimize risk. This is our business process. We're continually trying to improve, and that improvement should help us to get to that risk optimization sooner. Continuous improvement. Metrics drive strategy optimization and risk reduction. Metrics promote data-based, consistent decision-making. I don't want to make decisions based off of, I feel like I could. You feel? We don't feel, we see. We don't feel, we don't believe, we don't think. We see. When it's a trading decision, we see it in the charts. When it's a system or strategy decision, we should see it in the numbers, in the analytics. There's no feelings here. There's no thoughts here or beliefs. Well, there are beliefs, core philosophies that guide us, but not in our decision-making overall. The question came in and asked, how long does a full trading plan take to create? So that's a tough question. That's like if you go to a gym and say, how long does it take me to lose weight? Well, there's a lot of factors, right? And like your metabolism, how hard you work. Are you going to be committed? Are you going to follow the rules? Are you going to cheat on your diet? Same thing is true in trading, obviously, right? But here's what I will tell you is this. The number I want to put on it comes from what I've been saying this whole time. I want you to give it 3 iterations, 3 passes. Right now, we spend 1 week per section, so it takes us 2 months to get a pass at the trading plan, right? 2 months. We go through section 1, section 2, section 3. So in 2 months. Now, in that 2 months, what I ask for is I ask for 1 hour a week. Either 3 sessions at 20 minutes, 2 sessions at 30 minutes, 1 session of an hour, specifically directed to trading plan work. And watching videos doesn't count. So if you watch the 2 videos I usually attach in my email, there's 30 minutes of video. So an hour and a half if you count video time. 1 hour where you're working on your trading plan a week. Now, the first pass, the first 2 months, you've got you've got something on paper, right? Something's there, every section, every line. It's raw, it's rough. That's fine. That's the expectation. Then on the second pass, we really start to refine it. And you're like, oh, I have a much better sense of how to define, because now that you've seen it once, this is true. They've done studies that say that if you take a pre-test and then study something and take a test, you do better if you don't. It's like a primer, right? So the first one is a primer. You've gone through it. Now you're thinking about these rules that you know you're working towards. Now on the second iteration, this next 2 months, again, an hour a week, you refine the plan. And then on the third pass, 2 more months, you polish it. You really start to get the granular. The devil is in the details. You're getting into that real concrete ins and outs, dot the I's, cross the T's. And at that point, and I'm going to tell you right now, the trading plan you have there will be better than the plan, the first plan that took me probably 6 to 8 years to get to before I really got to a point where I'm like, now I have what I'm looking for and I just need to continue to refine it. That's what we're working on. So in 6 months, you will have a trading plan that will be better than 99% of the trading plans out there in retail trader space. Better than 99%. You're in the top 1% with that plan, with our record keeping. 6 months, an hour per week. That's not that much, right? That seems like a reasonable commitment for this endeavor that could change your life, that could change how you retire. Right? Somebody who goes from getting 8% on average from the market to getting 20%, that's life-changing. That's life-changing. I'm just saying. So that's a great question. A little bit of a long-winded answer. I know. You guys know I'm prone to being long-winded, but that's what I would say about that. So, and I hope you see then if this plan, if this structure is so important, why do I want to spend this time with, I get my slides are maybe a little boring. I should probably put some pictures in there, but like, we're here to do business. Hopefully we have our sleeves rolled up. Let's get dirty. Let's get work done. This is the work. This is what's in front of us. But what I want you to realize is we have it broken down. Like, it is where you want to be at the end of 6 months, having eaten the elephant. Yes. So it's hard to imagine that beautiful polished plan that you'll have in 6 months. Great. Don't think about that. Think about the first 20-minute session in the first week when you work on section 1. And then realize if you keep that up at the end of 6 months, your trading plan is off the charts. Okay, let's keep going. Developing a plan with adaptability. Emphasize adaptability. Again, constantly focusing on evolving market conditions. If that's in place, I've told you, people are like, oh, there may be a recession. Oh, this guy said, look, I'm not concerned until a certain point. We got to a little bit of a point in October. We're like, oh, our market posture turned negative for 1 week, only. We were in neutral. And even when it turns quote unquote negative, it's still neutral, right? It's neutral from, 1 or 2 down to -1 or 2. So it wasn't even then like, we're like, oh, this guy is falling. We know that we have mechanisms that'll show us where institutions are putting their money. It's changing. Great. We see it. We'll make an adaptation. The fear is escalating. That's been a constant of us. Even as we're bullish, we've been watching that characteristic so closely as a group, right? We're there. We have that adaptability in place. We want to have an integration of strategies. So do you have a robust plan integrating strategies into the system? So if the system changes, if you only have one strategy and the system's like, oh, you need to do something different. What do you mean? You only have one strategy. What's different? So make sure that we're evolving a number of different strategies that can cover diverse market scenarios. One of the types of alerts that I'm going to be giving, and if you're a stock trader, this is not going to be super beneficial to you. But as a stock trader, you're very limited in what you can do during a sideways market. But sideways markets actually provide pretty decent opportunity to options traders to put sideways strategies on. And so We're going to look to do that. Make sure that you have performance metrics in your plan. Of course, we have very specific trade logs that we use, right? We use trade logs that break our trading down into groupings of 25 trades. It gives us very specific data that we can then correlate into specific steps of our plan, right? That's a clear benefit that we derive from the record keeping process that we have. We ensure that our plan and any adjustment we make to the plan is data driven. It's not your trick knee from that old skateboarding injury that's going to tell you when it's time to make an adjustment. It's the data, it's the numbers. If you have it right, it's going to talk to you. Just like the charts tell us a story. The numbers tell you a story. It's pleading with you to make very specific changes in order to have a specific impact on your numbers. And in regard to the performance metrics, there's really a few core things we're trying to do. Are you trying to be right more often? Okay. That's a good challenge, is to make sure we're improving our signals, but to a certain point. It's not like you're going to be right 50% of the time. And then if you keep working, your system will be right 60% of the time. And then if you keep working, you're right, it'll be 70%. That's not how it's going to work. Whatever system you have, it's going to get to a certain point. I definitely have systems that are only right 45 to 50% of the time. 45 to 50. I'm just a little bit under a coin toss. Why is that system good? Because when I'm right, I get 2. When I'm wrong, I lose 1. So is the winning percentage enough to sustain the profitability factor? If I'm getting 2 to 1, I don't need to be right 70%. I'm not going to keep trying to be right 60, 70, 80% of the time, because there's no way you're going to maintain your reward to risk ratio in doing so. So what we're trying to do is recognize every system's going to have a certain point where we're like, here it is, right? If you sell candy bars, you're not going to just keep eventually getting better and better margins. Eventually, it's just going to be, it is what it is. You make 75 cents every time you sell a candy bar. You sell 100 a day. So you make $75 a day. That's profitable. That's part of your business. Boom. That's part of it. Great. You're not going to think, oh, how am I going to someday make $99 on those candy bars? Well, it's not going to happen. That's not the right pursuit. That's the wrong question to ask. Better question to ask is, now that I've figured out how much, what I can do is I can say, well, I don't really have a good analogy for this. When we talk about risk optimization, this is where trading is unique, right? If I have a business like a restaurant or a store, at a certain point, I have to open a second store. But with trading, that's not true. With trading, we can actually work on risk optimization, where we're actually taking more risk and making more money. And mathematically, we have the tools we need to attain that. Ongoing review and revision. Your trading plan is a living document. It is a representation of you. If you're improving as a trader, your trading plan should be improving as a representation of that. Someone asked the other day, how frequently? Right now, it's weekly. And then after you get to that 6-month period, then you might say, you know what, now I'm going to go quarterly. Now this is my plan. After those 6 months, you have your polished plan, and you say, for the next 3 months, I'm going to execute this. I'm going to make notes, observations, and at the end of 3 months, whatever data I have, I'm going to come in and I'm going to say, all right, now what? And then eventually you're going to get to a point, maybe you do that for a year or 2, and then you're going to say, it's just not changing that much. Let's go to every 6 months. And then eventually you'll say, you know what, let's just go once a year. We'll review, we'll see. That's where I would feel like I am. However, there are certainly times where if something starts to derail, one of the great things about a trading plan and the consistency it provides is, you know what successful normal looks like. And if you know what successful normal looks like, then you know the minute abnormal starts happening. And the minute abnormal starts happening, your expectation is, if I keep on this path, it will go to unsuccessful. It's not successful abnormal. We have time to say, whoa, something's happening. Let's make an adjustment. Okay, that's the goal. Common mistakes: failure to adapt, right? Again, we have a top 10. These are mistakes very specifically in the realm of adaptability and metrics. If you haven't been reviewing the top 10 trading mistakes, if you haven't seen it in, let's say, a month, go review it. Go look at it. Go see which of the mistakes on that top 10 doc can be mitigated through a better trading plan. And you'll be like, oh my God, 7 out of 10, 8 out of 10, just by improving my trading plan will help me to reduce this particular mistake. But when it comes to mistakes specifically in the realm of adaptability and metrics, failure to adjust strategies. Number 2, neglecting performance evaluation. Whether you don't have the record keeping or you don't adhere to your own record keeping rules. And look, there's no judgment here. I tell people all the time, I recognize wholeheartedly the importance of record keeping, and I am also a bit of a lazy record keeper. I am. Bob the other day said, I made a routine of when I take the trade, I log the entry. Ooh, it's a phenomenal idea. Right? Because the biggest thing that you want to not do is be like, oh, I'll log it at the end of the week. And at the end of the week, you're like, oh man, I've got 15 trades. You know what? I'll log it at the end of the month. And by the end of the month, you're no longer a record keeper. You're done. That's it. You've lost it. You've missed all that so much good data. Every single time, I'm not kidding you, every time I've had somebody go back in time and I'm like, hey, let's start with your last 25 trades. Take your last 25, put them in the first 25 of the spreadsheet, and then let's just look at it and see what it tells us. Every time, they're just like, oh my God. They're baffled. They're amazed by just how much information just that gave them about what they've been doing. I tell people all the time, I would know more about you as a trader if I took your spreadsheet with 100 trades and I spent 5 minutes. I would know more about you than if I talked to you for 2 hours and asked you questions, and right? Because when I ask questions, I get the filtered response. This is unfiltered, man. You can't hide from the numbers. The numbers tell the whole truth and nothing but the truth. That's why it's so important when we have them. There you go. So Bob said, I log it when I place the trade, complete it when it closes, or delete it if it doesn't fill. Phenomenal cadence. Wonderful cadence. Overlooking risk management. I mean, obviously, at this point, if you're overlooking risk management, you've ignored like everything we've said all the time. Risk management's the cornerstone. We have an entire section of our trading plan devoted specifically to risk management. If you disregard it, vulnerable to large losses, it can be debilitating. Mistake number 4, emotional decision making. Don't let the chimp out of the cage. Keep the professor at the computer, right? The chimp is emotional, panicky, raging, impulsive, frustrated, short attention span, destructive, whatever. Those are all chimp characteristics. Don't allow emotions to drive the decisions. That happens if you lose discipline, right? Either you don't have the rule or you have the rule and you lose discipline. That's what you need to evaluate. Do I have the rule? Yes. Did I lose discipline? Well, clearly, yes, if you're evaluating it. I don't know what to say at that point. If you don't have the rule, great. You've identified somewhere you need to spend some time in your trading plan. That's part of what we're doing, is this evaluation, this inventory to say, is our plan where it needs to be? I'm telling you, 6 months, 3 passes, 1 hour a week, best trading plan you could have ever imagined. You would never imagine the quality of trading plan you will have at the end of that. Okay. Let's talk about best practices. Number 1, Kaizen. Continuously assess, adapt, and improve. Assess, adapt, improve. That's it. Regularly review. I say every 25 trades. Whatever that is, that's the minimum expectation. If you're adapting, if you're assessing after every 10 trades, well, remember what we talked about, the law of small numbers. If it's not statistically relevant, it's not very helpful for us to try to make a change. So be careful about that. But we need to have it. Make sure we're looking to be flexible. Regularly evaluate performance using metrics. That's part of that same cadence. Maintain a strong risk management strategy. this should be old hat for you by now. This should all be like, oh, of course I do that. Of course I do. Right. And the stronger the plan gets, the more it's easy for you. If I say, what are you working on? At any given time, you should have 2 to 3 priorities in your trading plan where you're like, these are my focus right now. And when you finish the work on those, you're focusing on something else. And we're not trying to make like these fundamental shifts in our trading. Once that first plan is in place, it really reverts into that mindset of aggregation of marginal improvement. We make a little gain here, a little gain there. We adapt to conditions to make sure that we're doing the right thing in the right market, and you have yourself a trading business. Comment came in that said, understanding everyone's trading plan may be different. A session like this one, where we review a trading plan from top to bottom, would be helpful. Oh, I love it. I have one. I'm reluctant to share mine because I believe people ultimately look for cheats that they shouldn't look for. So I have a generic representation where I'm like, here is, I think that'd be great. We have a few, we're going to have to figure out some supplementary sessions. We have a few really good ideas. We have the trading experiment, where we have random stocks, random signals, but we trade it and we see how we do. We have reviewing somebody's, we actually have a couple of people who have volunteered to review their first 100 trades to go through. And then we have the ability to go through a full trading plan. Let me talk to my brain trust and figure out where might we do something. Maybe it would just kind of sit in the realm of these. Maybe we like come up with like an every other week workshop, quote unquote, workshop session. That sounds kind of like a cool idea. If you have any suggestions, put them on Discord, send them to me, email me. You have a lot of different ways to get a hold of me. I love that idea where we say, look, here's the thing with trading. A lot of times the analogy I use is trading's like a puzzle, and someone dumps all these pieces out in front of you and you're like, great. And you start turning them over and finding the corners. And as you're doing that, they walk away with the box. You're like, wait a second, what the hell is this supposed to look like when I'm done? Because without knowing that, it's hard to know where does things go, right? Yeah, that makes a lot of sense. Very great suggestion. Okay. Like I said, now that we've kind of planted that seed, if you have an idea of how would we create a workshop session where we can do these things, like look at a trading plan, like review the spreadsheet, like conduct an experiment. It doesn't sit well. We really don't have a ton of time in our trading sessions. So we have these 2 nighttime sessions. So do we move the schedule around and create room, or do we think about like an every other week separate that we could all get together sometime? I'm open to suggestions. What makes the most amount of sense to you guys? Okay, so let's talk about putting it all together, the synergy of systems, strategies, rules, and adaptability. I know I'm a little long, but we've had some great questions, so I hope you're good with finishing up here. Let's just make sure that we start in the right order. Start with part 1. You're working on the generics of the system. That's the foundation, the structure. If you haven't, review all the trading plan. Know all the things you're going to be working on so that you have a primer of what's coming ahead. Make sure you understand where the strategies exist within the realm of the system, and start to have your rules in place. Make sure that your rules are specific, that they represent the guiding principles that you can then follow with a high measure of discipline and minimize the impact of emotional decision making, right? Let's make sure that those rules promote that objective. We can't have ambiguous rules. There can't be kind of, sort of, gray. It's got to be black and white. And we've got to make sure that as we build those rules, we have a sense that they will lead us into the adaptability. When does the framework evolve? When do we shift and change? So we don't want, the more we can define with rules, I'll tell you, it's the same thing. When I'm trading, the more I can automate, the better. the more I can have the computer do it so that it's watching all the time. I'm not. It's unemotional. I'm not. I know that, right? The computer's not going to be like, well, maybe we should give it 10 more minutes just to see, like we do when we're doing it. So the computer, we want to have that same thought process in our rules, that the more we can automate through very specific rules, the better our trading will be. Successful trading synergy, when all of these components work in harmony, trading becomes systematic, conscious competence. We know what we're doing, we know why we're doing it, and we do it well with discipline. And that process is adaptable. It allows us to change. It allows us, when the market gets stronger, to push a little harder. It allows us to see something's developing. Let's ease back a little bit until we see what it is. It allows us to see, hey, this is really kind of getting into a bad place. Let's really pull back and implement a much more aggressive, management strategy. We're much more aggressive in expecting all signs to be in place, or we don't trade. That's all very, very important to help maximize our chance of success. Real quick summary. I know I've been answering questions as I go, but I'll always open it at the end. So if you have any remaining questions, go ahead and start putting them now, and I'll get to them here in a second. Adaptability is key. Traders must adjust their strategies to ever-changing market conditions. Flexibility is super, super critical. Make sure your record keeping's in place. Measuring performance is essential. Actually, I'm going to not say Sharpe ratio. I don't know how that snuck into my presentation. I don't care about the Sharpe ratio. I think I said that last time I gave this and I didn't fix it. I need to go fix that. Expectancy ratio. That's the key metric. Expectancy is everything, right? Everything. Common mistakes include failing to adapt, neglecting performance evaluation, overlooking risk management. So there you go. Find your synergy. Understand what the system is, what the strategies are, what the rules are, what elements have you integrated to promote adaptability, flexibility. Make sure you have a belief in this plan and these rules. If you don't believe in it, you won't be disciplined to it. We've got to believe that this is the path. So question came in. Paul says, is there a way we can share documents, that we can have a collection of PDFs? Okay, so there is the shared documents, and I'm assuming you mean documents maybe that are created by you. So all of like the group documents, trading plan, rule, the record keeping, things like that. But those are just accessible but not editable. I believe that you can share documents in Discord. But you know what? That's a great call out. Let me do a little research, and then if it seems like a viable feature, I'll put together a little tutorial on what that would look like. So if somebody said, hey, I'm going to put my trading plan up there for evaluation, as I think about a use case for that, I think, sharing each other's trading plans, if someone was willing to post, I don't know. Let me look into that. I'll get back to you. And see if we can't, my primary objective is to make Discord a feature that you'll be unable to live without, because of the interactions, because of the alerts coming through, because of your ability to chat with other traders who are like-minded and looking at things the same way you are, processing, under the same basic structure and framework. Anything else? Any other questions that I think I hit the key points here. Let me just quickly, Q&A. What are your questions? What we're going to move on to next. VIX futures are down. Are they down? Oh, yes. Sorry. VIX futures are down. Yeah. Meta, good earnings. Amazon, good earnings. Apple did well. I would expect more to come. So I would think that we're going to see some things popping. There's a very good chance we get our first alert going in tomorrow. I would expect things to continue off of today, possibly enough to break us out of the consolidation that we seem to be in. And if so, that's not much of a consolidation. That's a very bullish breakout. Yeah. So, all right. It's good to see everybody. This was a phenomenal discussion. I think we uncovered a couple of things that we might be able to do to help the group on an ongoing basis. We're going to continue. Let me see if I can't real quickly access what our next topic is. Let me give you a preview so you can get all excited about it. Market posture and trading posture. That's a big one. That's like we just said, if we're going to adapt, we have to know what we're adapting to. So you better have a real strong process for how you understand the conditions and characteristics of the market. I believe we have one in place. That's what we'll talk about. Okay. Thank you, Sandy. I appreciate the feedback. She said incredibly helpful. Your attendance is incredibly helpful and your participation, and it's much appreciated. Bob says I review it almost every day. Love it. It's good to see you guys. I will see you tomorrow, not in the morning. Tomorrow is our wrap up. We will be meeting at the end of the day. There's a good chance we're talking about some trading signals, so be prepared for that. Have a great rest of your night. And as always, happy trading.